Hey, everybody. Welcome to Profit Points Podcast, where we talk to professionals, industry leaders, and small business owners about what they see in the crazy world of running your own business. And Shawn Cahill is here with me today. I'm Michelle Ward, and we are going to talk about what happens when your client refuses to pay.
Yeah, it's kind of a tough thing because you as a business owner, as a business, you do all this work to get the customer, then to deliver your goods or services, and you want to get paid for all the efforts. You're paying employees, you're paying all your operating costs, inventory costs. So yeah, you want to get paid for sure.
Yeah. And I know in my experience, the longer there's the time between the services that's been provided to the time that you get paid, the diminishing of the value or the perceived value is there. So most people who have been in business for quite some time understand the necessity to get paid promptly. When you've delivered your product, either some people even take deposits up front, but, if you're delivering your product or your service immediately upon the delivering of that product or service, there is a payment of that. So the shorter the time frame that you have between the delivery and the payment is, there's a higher perceived value than that. So
absolutely, there's a reason the cash registers are right by the door to go out of the shop. You got to pay before you leave. There's a reason why you have to pay for your online shopping at the time you order it. That's because those organizations are not going to wait till later to get their money.
Yeah.
And a lot of contractors, especially with larger projects, want a percentage up front of the total fee that they're going to charge. Some of that's to order parts and the supplies, but some of it's just to lock you into, to get that. To get you've already invested in that project.
Solid commitment to the project. Yes.
Exactly. Right.
Yeah, absolutely. And I know for service-based businesses, it can be challenging to get paid on your service because some people tend to put off payment for the service. Unlike going into a store, let's say Target, and you purchase something, you can't walk out and say, well, I'll pay you later, Target. I'm going to take this product and I'll pay you later. Of course, you could use a credit card, but that's your way of making good on the transaction. But when you have a service-based business, there can be challenges for getting paid timely because people don't see it in the same way that they see going into a store to purchase a product.
Absolutely. And there's a lot of service-based businesses that will require payment, before they give you the deliverable. So in the accounting world, when you get your tax returns, before you get your tax returns, you have to pay certain accounting practices will require that. Certain law firms would require payment before they give you your documents that they've drawn up for you. So that's a different ways of operating those types of practices. But yeah, if you're just invoicing after the delivery of your service, then that time period from you delivering your service till you get paid, you got to try to get that done promptly and quickly. The longer it goes, like you said, the more perceived diminished value from that recipient of that service.
Now, we do have some people in our online community that are like mental health therapists or some sort of therapy practice. And most of the time, those types of practices require payment either right up front prior to the session or immediately after the session. Now, there would be a lag time if the person provided you with insurance and you were taking insurances, depending on how that works. But they've provided you with the form of payment in some capacity. Taking the copay is also really important
Right.
for those practices as well. So knowing what insurance copays are, or at least identifying the patient's copays ahead of time, so that you can at least get paid on that portion, and then you would get paid on the insurance piece at a later point. But you have to remember, you are putting a lot of costs up front in order for that service to be provided. So it's really important to try and get paid as promptly as possible. So one of the things that we want to identify is when you have a client that refuses to pay you, why are they doing that? Right? That's a big question, is why are they doing that? It can be that they have their own financial problems, right? And struggle with that. But there's some other things that maybe as the business owner or the service provider, you need to identify on your side to see what is happening there. And Shawn, do you have any thoughts on what you think?
Yeah, I mean, I guess the first thing is how are you taking payments? Are you making it easy for the client or the customer to pay you? Are you only accepting checks? Do you only accept cash?
Yeah.
So the more options you have for people to pay you, the quicker you'll be able to get paid. So some practices don't accept credit cards or debit cards, but like I said, the more types of payments you accept, probably the better quicker you'll get paid.
So outside of like expanding your payment options or the payment options, things that you need to consider when someone hasn't paid you is there some sort of value disconnect? Did the client feel that they didn't get the value from what you were doing? Has the job or the service been completed? If you, and this is another thing, is like, being clear on the communication, which we're going to talk about, but like, has that job been completed where now it is time to make payment? Or was there an issue with the service and maybe the client is feeling that things weren't done the way that they had hoped? And maybe a hard discussion needs to be had because of that. But your business potentially would be better for it if you knew some of the hangups that clients would have.
Yeah, and some of that could be just communication up front when you first accept the customer or accept the job, as to being forthright in what that engagement's going to look like, what that job's going to look like, and walk them through the steps as to when you're going to get invoiced for if you're doing it in steps or if you're doing it all at the end. How's that going to look? And then
what's the acceptable practice here? What is what's anticipated or the expectations from the client?
Yeah, over communication is key in these areas. And then once you do have that invoice ready, how are you going to get that to the client? Are you going to hand deliver it? Is it going to be mailed? Is it going to be some sort of online system where it's going to be emailed? And making sure that you have the correct information to be able to deliver that. I mean, are your emails to the client going into their junk folder and they're just not seeing them?
Yeah.
I mean,
that happens all the time. Yeah. I never saw the email. I'm so sorry, or it got misplaced, or
Exactly. Yeah. I just had that recently with a client. She's, it's been 3 months since we finished her tax returns. The emails were going out for the invoice, and she just never saw them. They were going to junk. So, and that's on me to make sure that I had to communicate properly to her how it was going to get delivered.
Yeah, that's a really important point, because I think that we assume that things are being, like, once we've done what we think is being done, that the other side is seeing it and they're just ignoring us. When in fact, it could be that it never made it to them, like the junk email, or the fact that maybe it got lost in the mail, or it got to them in the mail and it was picked up in a pile of stuff and accidentally thrown away. So just because you haven't been paid within a certain amount of time as the business owner, you maybe find another form of sending that invoice, or picking up the phone and calling them and saying, hey, I just wanted to make sure you got the invoice. Maybe there was some problem and they say, oh my gosh, didn't know you even sent it.
Right.
So, if you emailed, then maybe you need to mail. Right.
Yeah, give the customer a little bit benefit of the doubt for that first kind of communication
time, a couple times,
exactly.
the first month or so,
right.
Especially depending on how your invoices are structured. Do you give them 15 days? Do you give them 30 days? How does that look? So
yeah, that's an important point too. Is have you communicated how quickly you're requiring payment? Is it 15 days? Is it 30 days? Is it upon receipt of the invoice? And what is the typical turnaround time for all of your clients? Are you getting paid, within 15 days or 30 days, or are most of them paying within 60 days? And if that's the case, and you want to get paid quicker, you really have to change your practices and how you communicate that turnaround.
Mm-hmm. And one of the good things about having an accounting system in place, whether it be even just Excel, but having some kind of system that you're tracking who hasn't paid you yet. This isn't a huge deal if you have a handful of clients, because you probably know who hasn't paid you. But if you have a number of clients and all of those moving parts every day, it's very easy to lose track of who in fact owes you. And so when you have an accounting system, let's just say a QuickBooks system or some kind of online program system that has invoicing capabilities, you are able to see who in fact has not paid you on a regular basis. So you can go in there at any given point and pull a report to see who owes you and how long have they owed you. And I always say, and this is probably for a different discussion, but anything over 60 days, you need to start really looking at,
right.
Because again, you're further and further away from the time of the product or the service was delivered, and that starts to lose that value.
And some of those online systems like QuickBooks, when you invoice the customer through, and it goes through email, you can see in the history as to whether they actually viewed the invoice. Mm-hmm. So you can go in there and say, oh, this person hasn't
even opened it.
They haven't even opened it. And so that could be a clue as to they're not receiving it. And if they're opening it and then, just ignoring you and not paying you, then that could be a potential problem. That's, that's like the next step is there a problem with the services or the products that have been delivered, and is there some issue with your client that you need to talk about and talk through and have those hard discussions as to why you're not getting paid.
Many times what I see is that, people go into these transactions or these relationships and provide a service or a product, and then they have trouble collecting on it. If I want to say, maybe present the client with an option like, you haven't paid us, but maybe there's a payment plan that we can have that's like unofficial kind of payment plan that I would be willing to accept, a certain amount of money over a couple week period, or, to give them the ability to kind of pay you. And, you're trying to keep the relationship positive. And so that you can work together again in the future. And just because they might be having a slight problem right now doesn't mean that they will in the future. If it turns into that they continue to have problems paying you, and every time you work for them, there's an issue and you're hunting down the collection, you may want to examine that client relationship, or that, relationship with that person.
Yeah, absolutely. I know. I mean, there's always going to be clients or customers that that are really slow in paying, and they wait till the last possible moment, or string it out as long as they can, and they do that over and over again if they're repeat customers. So is that detrimental to your business? Is it a large dollar number that you're floating for a long time, or is it a smaller number that you can live with that being out there? And then if it is out there that long, do you want to charge interest on those payments, or on
or
those
some kind of fee for not making payment timely?
Yeah, because you may have engaged with a billing provider that is charging you money to bill and collect, and you may need to charge fees for late payments so that you can
recoup your costs.
pay your service provider that's doing that for you.
It's a really good point, because there's some people that in their business, they have other people working for them, or they have to pay subcontractors to do certain work for them to get the job done. And when doing so, you're putting out money prior to getting paid, potentially, if that's how you structured it. So, you can only float that so long. We only have so much financial capacity to do that. And when someone doesn't pay you, you got to remember all of the costs that you're putting out up front, even just overhead costs to run your business. All of that adds up. And when you don't get paid, you're the one that's basically financing all of this for them, for the service that you provided to them.
Right.
So
you may have debt obligations that you need this cash flow for. And if you can't meet those debt obligations, you're going to get charged higher interest. So it's a
circle or a cycle.
Your vendors and your lenders want to get paid timely as well. So not having that cash flow could be costing you money on the back end by not being able to pay other providers.
Yes. Yeah. So if you're not getting paid and you've gone down these multiple avenues, the next step might be that you need to send an official letter to the client or the customer saying, we've provided you this product or service. We require payment on this. Maybe even mention that you wouldn't be able to do work with them in the future if they were not able to pay you. And if it's important to the client, obviously they're going to reach out and try and make some kind of payment plan or make full payment. And in many times, letters like that can work and get the attention. It's not just a standard invoice that they're getting. It's an actual letter.
Yeah, it's not a statement. It's not a reminder.
No, it's a true letter from the business.
Yep.
Yeah.
Yeah. And then if that doesn't work, the next step is, you could have your attorney draft a letter, and at that point, you're basically threatening debt collections.
Yeah.
And that's going to be unfortunately, you could be in that situation, and you may need to take those more drastic measures. If your attorney's going to do that for you, there's a cost to that. So you got to weigh the cost benefit, as well as the next step, which would be then collections.
Yes, exactly. So, having an attorney do that is costly. But I can tell you that sometimes just the threat of going to collections or the threat of going to court, depending on the cost, is enough for the client to kind of address the situation. Be like, yes, I know I owe you. Maybe we can arrange something here that we can make payment on this, so that neither one of us is going through a difficult, court trial, or that, there's collections. Going to collections is the next step. And it is going to be pretty costly, right? Way more than even the attorney writing a letter for you. So what you're going to collections for really needs to be worth the added expense of court or attorney fees. Yep. So we want to make sure that that makes sense to you.
Absolutely. And again, going back to, if you're running into this um, often, and you're always in this situation, again, go back and re-examine your policies and procedures and how you're communicating, and the types of payments you're accepting, because maybe you need to change how your front end processes and all that stuff.
Yeah, the communication up front,
absolutely.
Signed engagement letters, or signed estimated invoices that, the client is aware of the quote that is involved, so that things aren't a surprise. Some things are surprises to customers when they're not clearly communicated. Maybe not so much the upfront cost or the cost that they think it's going to be, but what if there's some upcharges or some, change fees? Basically, like the customer changed their mind on how they were going to do something, and because of that, there's an additional fee that needs to be assigned to, the job. Well, that happens on a regular basis. People that are your customers need to know that that is a potential, right? In the event that I change my mind midway through this project, whatever that project is, whether it be a life coach or whether it be a construction job at your house or your business, if there's some sort of change to the what was anticipated from you, maybe not so much. I mean, maybe if it's a vendor issue, because we're running into that a lot now. But if there's a change by you, like, oh no, I want a bigger sink and I want it over on the other side of the kitchen. Well, that's going to have a change, a fee associated with that. So being upfront that those things are possibilities to kind of cover your own butt,
experienced, you're talking more like for contractors, but it's
a good example.
Yeah, exactly. But it can be in your service businesses as well, like like accounting firms or law firms. You set a set of expectations of what the job's going to be, or what you're going to provide, and if the job takes longer, or if the client requests additional documents, like from like law firm, or additional services from the medical provider, then there's could be additional fees, and you need to communicate that up front. And when they do request it, it's good to have that conversation right away, instead of just invoicing them at the end and there be a surprise. And if you're doing proposals and you're doing estimates and stuff like that, and you see that your proposals and estimates vary all the time from what your end invoice is, then you definitely need to change how you're writing those proposals and providing those estimates, because you're not going to be successful, and you're going to have problems with your customers if that's ongoing.
Yes, absolutely. I mean, that happens quite often, especially in the contracting industry, where, you're writing estimates up. And if you haven't really kind of perfected your process on how to determine those quotes, that can be detrimental to, one, the job that you're working on, but also how that customer or client refers you to other people. They could be saying, oh, well, this guy told me it was guy. I say guy, but it could be a woman. This person told me it was going to be $3,000 and it turned out to be 10. And they never communicated that with me. So that is an issue. Now, if it's midstream and something changes, saying this is outside of the scope that we originally quoted you, I will give you another quote for the additional services, and you tell me whether or not that you want to do that. Right. And that's a way of, kind of making sure that, you're getting paid for what you're doing.
Absolutely.
No one is in business just to give away their product or service. You gotta charge a fair price and, make a living yourself. And so, that all needs to happen.
Yeah. And then you also don't want to be taken advantage of by customers as well. I mean, there is a flip side to this, because there are customers and clients
that would do that.
that will do that. They do that. We've experienced it ourselves.
Yeah.
It happens. So
Yeah.
you need to be fair to your customers, but also accept fairness from them as well. So
Yeah. So identifying, if this is an ongoing problem, is it lying with you? Is it lying with the customer? It could be that the customer is a difficult customer to do the job for, and they are slow paying. Maybe that customer needs to be released into the wild to go run with other people.
Right, exactly.
Free them and be done, because you're really not making any money on that job. You're really not producing a positive feeling in your business, working with people that, kind of are difficult to work with and are not paying you for that difficulty.
Yeah,
So,
they're probably causing you stress. Your employees or your other contractors, they could be causing them stress. And
yeah.
so sometimes you gotta let them go.
You got to let them go. Yeah.
Yep.
So, okay. So what happens when you've gotten to the point where you've exhausted your collections, or, you just feel like, okay, I am not going to get paid on this job. What happens then, right?
Yes.
What does that look like?
Yeah, so then it becomes a bad debt. You have to write off that receivable. You're if you're keeping receivables, which you probably should be if you're invoicing a lot, then from an accounting standpoint, that's an accrual basis accounting, and for accrual basis financials, you write off the accounts receivable because it's already been in income. You get a deduction for that.
And basically, what that means
expense.
is that it's an income, and then you get a bad debt, and it offsets, right? It kind of nets down to zero.
Right.
We have to be clear, though, that is when you're looking at your financials. Tax purposes may be very, very different, because for tax purposes, not everybody is on accrual basis, especially in smaller businesses, smaller service-based businesses. You're not on an accrual base accounting for tax purpose.
Right. So you'll be on a cash basis. So for cash basis, you recognize income when you receive it. So if you haven't gotten paid, you haven't received that income. So you get no deduction when you write off that bad debt. You would already have paid. You've already expensed everything related to the products, the materials, the other costs related to providing that service or product. So those are still expenses that you can still keep on your books, but you just don't get that extra bad debt expense because you've never recognized the income. If you are on accrual basis for taxes, you've recognized the income, so you get the deduction to offset that.
A lot of people get confused about that, and I had this, but what happens if I don't, get paid? I can write it off on my taxes, right? And it's like, well, no, you've incurred the expense for that. It's unfortunate that you're not getting paid on the income. That is a loss in your mind that, you've put out that service and not getting paid for it, but you've never picked it up in income. So it's just a no income recognition.
It's just a non-event for cash purposes. But, again, you're keeping your books on accrual basis because you have receivables. So you do for your financials, for your accrual-based financials, you get the expense on that. And if you are accrual for tax, you get the expense as well. So
right.
And it's especially important if it's in different periods, different years. That because if you recognize the income and pay tax on it on accrual basis in a prior year, and then the next year you have to write it off, you get that expense in that year. You don't run it back. Unless the collections have been exhausted in that old period, but you forgot to write it off, then you could go back and amend. But there's specific tax rules related to the timing of when you can write off a bad debt. So that's a discussion for off of this podcast.
All right. Well, I think we pretty much highlighted the major points of the podcast, and we thank you for joining us today on this podcast. Please like and subscribe to us on YouTube. We have a lot of great content on there to help small business owners run their businesses better and just be more educated. So thanks so much, guys. Take care.
Take care, everyone. Thank you.